Welcome back to Investing Talk podcast. Today, we're going to dig into a company that's really right at the forefront of genetic medicine. They're navigating some incredible science, but also, some significant industry challenges. We're talking about Sarepta Therapeutics, a name you've probably seen in the headlines, especially for their work in rare diseases like Duchenne muscular dystrophy. So, our mission today, to sort of pull apart the layers here, we'll look at the financials, some really important recent safety updates, and how the market's been reacting. We want to give you a clear picture of where Sarepta stands, what's driving things, and what might be coming next. Think of it as getting you up to speed on a company really pushing the boundaries of medicine. And hey, if you find these explorations valuable, please remember to subscribe, like, maybe leave a comment. And if you feel like it, consider buying us a coffee. It genuinely helps us keep doing this. Okay, so let's unpack this. Sarepta Therapeutics. What exactly are they, and why are they such a big deal in the biopharma world?
Well, Sarepta is a biopharmaceutical company, and they are laser-focused on developing precision genetic medicines. We're talking about treatments for rare neuromuscular diseases and also central nervous system conditions. Their main area of recognition really is Duchenne muscular dystrophy, DMD, and also limb-girdle muscular dystrophies, or LGMDs. And importantly, their portfolio isn't just ideas. They have products already on the market, plus a really expanding pipeline targeting muscle, CNS, and even cardiac diseases. What's crucial here, I think, is their first mover advantage with key products. You mentioned Elevities, that's their gene therapy, and they also have established PMO products. This really gives them a leadership position in their niche, backed by, strong intellectual property. It creates a barrier.
That first mover advantage you mentioned, why is that so critical, especially in the rare disease space?
Well, it's absolutely vital. I mean, being first isn't just about, bragging rights. In rare diseases, patient populations are small. The need is huge. Getting that first approval means building trust, getting doctors familiar with the treatment, and frankly, capturing a big chunk of the market before competitors even show up. You're building that foundation of clinical data, real-world evidence. For diseases like DMD, where time is just so precious for these patients, that early regulatory nod lets Sarepta build a kind of moat around their therapies. It's built on trust and that critical regulatory precedent.
Got it. So they're making a real difference for patients, which is obviously the goal. But switching gears to the investor side, we need to look at the numbers. And financially, Sarepta is, well, it's a fascinating picture, sometimes confusing. Let's look at Q1 2025. What are the latest revenue numbers telling us?
Okay, the revenue figures definitely show strong top-line growth. It's a clear positive. For Q1 2025, their total revenue hit $744.86 million. Yeah, that's an 80.2% jump year over year. Pretty impressive. And if you break it down, product revenue alone was $612 million. That's a 70% increase from the year before. Their main gene therapy, Elevities, was a huge driver. It brought in $375 million just in Q1.
$375 million.
Yep, that's up 180% year over year. Huge acceleration. In their PMO franchise, it's the older RNA-targeted tech, still added a solid $237 million. So the trend over the last few years, accelerating top-line growth, driven by these new launches and expanded use cases.
That 80% revenue growth is certainly grabbing attention. Strong market uptake, clearly. But then you look at profitability, and it raises some questions, right? What about earnings per share? Why the big difference there?
Right, and this gets to a really key point about turning that revenue into actual profit. It's a classic biotech challenge at this stage. For Q1 2025, their earnings per share, the EPS, was actually negative $3.42.
Negative $3 compared to positive last year.
Exactly. Last year, same quarter, it was positive $0.73. So that's a really significant decline. And it was a big miss compared to what analysts expected. They were looking for positive earnings. So because earnings are negative, the price-to-earnings ratio, the PE, well, it doesn't really apply. You can't calculate it meaningfully. But if you look at valuation differently, say, price-to-book ratio, PB, it's around 15 times.
15 times book value.
Yeah, which is way above the sector average. It basically tells you the market has really high expectations for Sarepta's future growth and profits, way beyond their current assets on the books. Investors are betting on the future blockbusters, not today's earnings.
Okay, a PB of 15 definitely signals the market betting big on the future. What about other financial health signs, like debt, cash flow, return on equity? Do we have those numbers?
Well, Specific figures for debt to equity or free cash flow weren't in the recent quick summaries. You need to dig into the full quarterly filings for those. Same for return on equity. It wasn't specified, but given the ongoing net losses, it's almost certainly negative. And that's pretty standard for biotechs at this point. They're just pouring money into R&D.
Right. The research costs must be enormous.
Absolutely. Bringing one gene therapy to market can cost billions and take a decade or more. So that cash burn during development and early launch is just expected. We also know they don't pay dividends right now. Again, typical for growth companies reinvesting everything. And it's beta, the volatility measure, usually above average. The stock tends to swing more than the overall market. High risk, high reward. That's biotech.
Okay, so we have this picture. Amazing revenue growth, especially from Elevideos, but still negative earnings, high market hopes. What's really driving that disconnect? And how does Sarepta fit into the broader, super competitive biotech landscape?
It really highlights that tension, doesn't it? Amazing innovation versus the tough realities of the industry, that disconnect between revenue and profit. It's mostly down to those massive investments in R&D and actually selling these new gene therapies. It costs a lot to launch. They're deep in that high-growth, high-investment phase, trying to expand reach, develop more treatments, and they are still seen as a leader in precision genetic medicine for these rare diseases, especially DMD. They've got strong patents around their tech, what drives growth, more approvals, hopefully better insurance coverage as these therapies get established, and just making progress on the pipeline for other diseases.
But it's definitely not all smooth sailing, right? Especially in a field like gene therapy that's so new and closely watched. What are the big red flags or risks here?
Oh, the risks are definitely substantial in this sector. You've got regulatory uncertainty around these novel therapies, the approval path can be bumpy, and post-market monitoring is intense. Then there are those huge R&D costs we mentioned, the cash burn, and just fierce competition from other innovators racing for similar targets. A really critical point recently was that guidance cut we'll talk more about. It kind of signaled maybe some operational hiccups, even with great sales for Levodois.
A guidance cut despite strong sales.
Yeah, raises questions. And while Sarepta leads in DMD and LGMD gene therapy specifically, they face giants like Pfizer and Roche who are also in the space or looking at it. Those big companies have way more resources for selling globally, for R&D partnerships, though Sarepta's specialization does give them that speed advantage in their niche.
The market's definitely reacted strongly to recent news, lots of volatility in the stock. Can you walk us through some of the key things that happened recently that have really shaken things up?
These events really do show you how volatile biopharma can be. So back in May 2025, the stock just tanked over 26% after hours.
26%? Ouch.
Yeah, and that was right after they lowered their full-year guidance, which was surprising, like you said, given that strong revenue growth we just talked about. They had guided Elevidois revenue between like 1.5 and 2 billion for the year, but cut it down to 1.0 to 1.1 billion.
That's a big cut. What was the reason?
They didn't spell it out explicitly in the headlines, but it suggests maybe slower patient uptake than hoped, or manufacturing issues, or maybe bumps with getting insurance coverage. Investors got worried. Then in June, just recently, Sarepta put out a safety update about Elevidois. They announced new steps to tighten up safety protocols, especially for patients with DMD who are non-ambulatory. This followed some earlier concerns about side effects, which always get intense scrutiny with new therapies like this.
Okay, so a big guidance cut, a safety update. Sounds like major headwinds. Was there anything positive happening amidst all that, sort of balance things out?
Yes, absolutely. There were some very positive developments, too, giving a more nuanced picture. Also in June, the FDA granted something called Platform Technology Designation to the viral vector they use in SRP 9003.
Platform Technology Designation, what does that mean?
It's actually a pretty big deal. SRP 9003 is their gene therapy for a type of limb-girdle muscular dystrophy. The designation means the FDA has basically given a thumbs up to the core delivery system, the viral vector itself. So for future treatments using that same vector for other diseases, it could seriously speed up the approval process.
Ah, so they don't have to reprove the delivery tech each time.
Exactly. Could save years and huge amounts of money. That's a major win for their pipeline strategy. So that positive regulatory news, plus the strong Q1 revenue numbers reported back in May, despite the guidance cut, did help sentiment. In fact, right after that platform designation, Scotiabank upgraded Sarepta's stock. They basically said maybe the risks were overblown and the growth prospects were being underestimated.
Interesting. So a real mix of very impactful news, positive and negative. How did the market overall, and maybe social media, react to all this?
Well, analyst upgrades and big regulatory wins like that platform designation usually boost trading volume and push the price up, and we saw some of that. But there's always more going on. Remember, earlier in the year, March, they had that temporary halt on Elevidys trials in Europe.
Right, because of a patient's liver issue.
Yeah, acute liver failure. That obviously caused concern. But thankfully, an independent review in April confirmed the benefit-risk profile was still favorable and trials resumed. That whole episode, though scary, kind of showed the resilience needed here, alongside the volatility. On places like X, Twitter and Reddit biotech forums, those recent upgrades and the Q1 results definitely got people talking bullishly. Investors, patient groups. But you still see caution. People want more long-term data on how well these therapies work, and they worry about potential side effects down the road. That's a constant theme with rare disease treatments online. Patient safety is always front and center.
Okay, so looking ahead now, what are the key things, catalysts, or risks that anyone watching this space should really keep an eye on for Sarepta? What's coming up?
Yeah, there's always more to watch in this field. Upcoming catalysts, definitely more updates on Elevidys and that revised immunosuppression plan they mentioned for safety. If that goes well, it could really boost doctor confidence, maybe widen who can get the therapy, and help with insurance coverage. Also, we'll be watching for more results from later-stage trials or maybe expanded approvals for their other pipeline drugs. Like any good news from the LGMD program using that new platform tech, that would be a big one.
Makes sense. And on the flip side, the risks.
Well, the main risks are still tied to those safety findings. Any new issues or tougher regulatory actions could cause delays or restrict how their key drugs are used. That's always hanging over them. And competition. As bigger pharma companies push more into gene therapy for DMD or other rare diseases, that could pressure prices and challenge Sarepta's market share.
All right, so putting it all together, the amazing revenue, the cash burn, the regulatory wins, the safety questions, what's the general takeaway? How should people view Sarepta right now?
Based on everything we have now, the general view seems to be leaning towards hold. Look, Sarepta clearly has impressive sales momentum. They're a leader in their niche, no question. And that pipeline looks promising using really cutting-edge science. But that near-term uncertainty around Elevidys safety and how regulators will fully respond, that justifies some caution right now. Until we get more clarity on how they're managing those risks for Elevidys and how that might affect future sales, it probably makes sense for investors to just watch closely. Monitor those upcoming clinical updates, regulatory news, before maybe jumping in further. It's a company with huge potential, but also facing some very real complex hurdles.
So what does this all mean for you listening? Sarepta Therapeutics is really a textbook example of a company operating right on the edge of medical science. They're facing those very real, very difficult challenges of bringing breakthrough science to market, especially something as complex as gene therapy. It just perfectly illustrates that tricky balance between innovating rapidly, ensuring patient safety under intense scrutiny, and dealing with the realities of getting approvals and getting paid for it. So here's a final thought for you to think about. As these gene therapies potentially become more common, maybe moving beyond just rare diseases, how is that balance between pushing innovation fast and ensuring long-term safety going to evolve? And what's the shared responsibility between the companies developing these treatments and the regulators overseeing them to communicate all these complexities, not just to the market, but crucially to the patients whose lives really hang in the balance? Thank you for joining us on this look into Sarepta Therapeutics. If you found this valuable, please do subscribe, leave us a rating, maybe a comment, and hey, if you're feeling generous, consider buying us that coffee. Your support really does help us keep bringing you these explorations. Until next time, stay curious and keep learning.